Hello and welcome everybody to today's Commodities Corner presented by myself, Phil Carr, at the Gold and Silver Club. So welcome everybody, of course, to today's analysis where we go through a watch list of trade ideas. We'll go through a forecast of where we're looking for gold, silver, crude oil, and also the commodity currencies to be heading next. We'll be answering questions and of course providing live support as well. As always, contributions are very welcome indeed. So if you do have any questions, do feel free to put those into the chat. Just before we get into it today, let me introduce you to the Gold and Silver Club. So the Gold and Silver Club is regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies, the agriculture markets, they're routinely sought by major financial television channels and publications, which includes Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Over the last 10 years, myself and my team of experts, we have trained and mentored thousands of private traders from all over the world on our exclusive research-driven strategies. For further information about our services, you can, of course, just go to www.jointhelivetradingroom.com. Also, if you haven't done so already, make sure that you are subscribed to the Gold and Silver Club on YouTube so that you receive all of our regular reports as well. So we just put out a new report for the week ahead with all of our forecasts. So I'm sure a lot of you are already subscribed, but if you haven't done so already, make sure you are also following YouTube, the Gold and Silver Club. Okay, great stuff. So with that, we've got lots to cover, guys. So it's been approximately 2 or 3 weeks since we've last had a Commodities Corner. So we've got lots to catch up on. We'll go through with you what we're looking at the moment for the week ahead. It's a bank holiday today in the UK, but throughout the rest of the world, markets are open. So there's still lots of moves happening. So let me just keep you updated and really give you a bit of a glimpse into the price action and some of the narratives that we're seeing at the moment. So one of the biggest news items we in fact had just yesterday was caused again by Donald Trump. So we've seen essentially US stocks slumping on Monday with the Dow Jones Industrial Average falling over 350 points to the downside after President Donald Trump shocked investors by threatening to hike tariffs on Chinese goods this week. So that sparked a flight to riskier assets. What's interesting about this is, of course, we had Friday non-farm payroll, and we saw a decent non-farm payroll. S&P 500 rallied. We also saw a retrace higher on oil as well as gold as well. Some of the major currencies too, they all retraced higher. And this news, of course, just again gives you another reason why sometimes it is worthwhile taking your profits off the table on a Friday before the weekend, and you can be better off sometimes, rather than executing new trades on a Friday, waiting for any weekend gaps and then doing that on the Monday. So for example, if you had bought the S&P 500 on Friday expecting to hold that over the weekend and looking for more upside this week, you would have had a bit of a rude awakening, the fact that it gapped down significantly lower. I mean, the Dow Jones as well, back down 350 points. Oil gapped down significantly lower as well. Now, of course, sometimes that will work in your favor. If you were shorting oil, shorting the S&P 500, that gap down on the open can work in your favor as well. But for the most part, you want to protect your trades going into non-farm payroll, bank profits ahead of it, take advantage of the moves that happened that day, but try and be a bit light on normally the Monday after non-farm payrolls. We can see some exaggerated moves in the market, particularly if there are going to be bank holidays. Donald Trump has chosen yesterday to make this announcement. Donald Trump tends to be quite calculated with some of his news items here. Of course, he probably saw the S&P 500 broke out to all-time highs on Wednesday, Thursday of last week, or towards the beginning of last week, in fact. And with that, we've now seen a sharp correction lower. So this is going to be interesting leading into this week. We did see gold steady a bit earlier on in the session. Off the open, it gapped up and broke out to about 1284, 1285 zone. It's now retracing right now around 1278. I am actually looking to buy back into gold at the lower end of the channel around 1270 to 1275 if it retraces that low. Gold, very straightforward at the moment. Trade the range between approximately 1270 back up to 1290. That is my plan on gold for this week, and I'll go through that in more detail with you to when we go over to the chart. So China said on Monday that a delegation was still preparing to go to the United States for trade talks, even as US President Donald Trump dramatically increased pressure on Beijing to reach a deal, saying he would hike tariffs on Chinese goods this week. So with that news item coming out from China, this positive sentiment has now caused a lot of the gaps to get filled. We've seen retracements higher. Oil has almost filled the gap. We've seen the S&P 500 retrace higher. That's often also the case too. So if you do come to the markets like on a Sunday evening or Monday open and you see there has been gaps in the market and it starts to fill, often there is a gap fill opportunity, which is essentially trading that gap from the Friday through to the current open. You can trade the move back to where the price closed on Friday, which I'm sure a lot of you are aware of. But that worked out quite well for quite a number of markets, in fact, today, where the retracement has just, for the most part, has either filled the gap or is on track to filling the gap. So it's been quite interesting from that point of view. Some quite straightforward trade opportunities there as well. So there is a bit of optimism here with respect to China this week as to whether they are going to have some sort of movement forward with regards to negotiations over the course of this week as they are preparing the delegation to go over to the United States. So we'll see how that develops, but that will be a news item worth keeping an eye on. Certainly that will have a big impact on the markets. Now the dollar, as I mentioned before, the US dollar tends to be strongest in the last week of the month and the first week of the month. The US dollar broke out to two-year highs, the previous week, and also broke out after the FOMC statement last Wednesday. The dollar strongest day of the week is Thursdays at the moment. So throughout 2019, Thursday, 90% now of the time, the dollar will rally or go higher on a Thursday. But over each day of the week, the dollar tends to be strongest on a Thursday. Why is that important? It's important if you're looking to sell short the euro, or if you're looking to sell short the pound, the Australian dollar and New Zealand dollar. You tend to be better off to do that around Wednesday close, and certainly on Thursdays. That's where they tend to pull back more significantly. They tend to retrace higher at the beginning of the week. The dollar's actually under a bit of pressure at the moment today. Normally the dollar is weaker at the beginning of the week and then normally puts in the low around Wednesday and starts to rebound from Wednesday, particularly Thursday, and then Friday it's a bit more consolidating. But Wednesday and Thursday in particular can be really strong. So I'll be looking out for that dollar strength to come back in to the market midweek, and that could push gold back into a buy zone of around the 1270s. So we'll see if we get that dip lower. Also, we've seen quite a common occurrence on gold this year, which is to see a rally on Friday. If we see a significant dip lower on gold by Thursday, for example, we often get that bounce higher on Friday. So we saw one of the biggest one-day moves in 2 months on Friday after the non-farm payroll for gold. But I'll talk you through that in more detail when we have a look at the chart. And then we've had oil here, which gapped down over 2% for Brent crude oil, broke back below $70 per barrel. We'll have a look at that together on the charts as well. It's been quite interesting that the oil inventory data last week showed the highest increase in inventory since September of 2017. Hedge funds and money managers, they've reduced their net long positions on crude oil as well. So we do have these factors which are being a bit bearish for oil, and oil on higher time frames right now on the weekly chart does look a bit bearish. So with that said, what we'll do, guys, we'll go over to the charts and I'll talk you through some of the trade ideas that we're looking at the moment. And if there's any questions at all, do let me know. Okay, so I'm just going to share my screen. Should be able to see that very shortly. I'm just on gold, just making sure you can still hear me okay, and you can also see the presentation as well. Great stuff. Thank you, Sharice. Okay, good. So let's just start it off with gold here. So gold at the moment is trading at $1,278 per ounce. In fact, what you'll note at the moment, really, gold is ricocheting between support and resistance. If you put this on a raw chart without any indicators, which actually I can do, so let's do that just so you can see exactly what I mean, and we'll just very simply clean this chart up ever so slightly and you'll see what I mean. Okay, let's just put that on the daily in candles. Okay, so what you'll note at the moment on gold, if you just look at that on a raw chart, it is ricocheting between support and resistance. So you're looking at a 200-point range here at the moment, week to week at the moment. It's been like that for about 2 weeks. and we're expecting the same again for this week. So essentially what you could do is we've got resistance coming in around 1285 to 1290, and then we've got support very clearly at 1265 to 1270. So you could either look to sell around resistance, then take the price back lower again. I'm still looking for the price to come a bit lower. It's at 1278 at the moment. Then I'm looking to be a buyer once we get between really 1265 up to about 1275, within that range. Okay, that's my buy zone at the moment, and I'm looking to pick up along at that entry around that sort of zone. So I'm looking for the price to potentially just ricochet within those ranges, but at some point this week I am looking for a revisit back towards the upper end of the channel, and potentially on another test of that level I'd look for a breakout ever so slightly higher up towards 1290. Okay, that's the level I'm looking at. So one of the reasons for my bullish bias is that hedge funds and money managers, they've switched from net sell short, they're now net long. And what we tend to see is when we get a bounce back towards that 1266 to 1270 zone is suddenly a very fast and big move for gold. And it's normally a fund buying in, and you'll suddenly see it capitulate on lower time frames. You'll see a sudden big move, which is what we saw on Friday. And that's what I'm looking out for, because I do see funds of buying the dip at the moment on gold. And overall, although it's under a bit of pressure right now, I'm looking. It's more or less where it closed on Friday at the moment, around 1278. So previous resistance providing some support. We might tick a bit lower, but I'm essentially looking to trade the range. You could even short it back to around 1275 to 1270, rather than short gold. If my bias is that I'm looking for gold to go lower, I just go long the dollar, because it's the inverse correlation. So if my thinking is that gold will pull back, I will either go long the dollar, or I typically will look at selling short the euro US dollar as well. Very much like for like, because I'm more interested at the moment in buying gold at support rather than trying to sell it. I'd rather go long the dollar than sell gold. So where we are right now, we're at 1278. I'm looking to be a buyer between that 1266 and 1275 zone, which takes me back into these more detailed charts. So what you can see here is right now we are sitting around the 21-day moving average, the ATMA. The anticipation is that we could roll a little bit lower, come back down to my strike zone of around 1270 to 1275, buy back in and look for a profit target of about 150 to 200 points over the course of this week from Monday right the way through to Friday. I would have the expectation that we could hit that level later this week. If gold was able to continue to roll over, break down, break 1266, then you've got support at 1262. That will be the next key level. I've noted quite a lot recently that gold seems to be quite vulnerable on Tuesdays mornings in particular. We do a gold asset of the day, which we put together a report on this, and we do that on Tuesdays. And typically when we are going through the recording of that on Tuesday morning, gold tends to be at its lowest for the week or thereabouts. So just be mindful of that you might be able to get a better price if you are looking to go long gold, or you might be able to short it and take it down a little bit further if we see this momentum break down overnight. So basically, if overnight we roll over with gold, breaks below the swing lows and starts to make a move back towards 1270, it could be a nice zone to look at for a potential long at that level. That's my plan at the moment. And then that brings me over to some of the other markets we've got on the radar right now as well. So of course, oil here is well worth having a look at. And again, let me just bring it over to a bit of a raw chart here to give you a bit of a sense of what is going on. And let's just bring out also, we'll bring out the 200. Actually, no, we'll put on the 21-day moving average here. Okay, so what you will see very clearly with oil, we've mentioned this a lot of times before. If you want to stay on the right side of oil, this is Brent crude oil, where the 21-day moving average, as well as other points that you want to take into account that I've just mentioned regarding the trade war tensions and hedge funds and money managers, they've reduced their net long positions. And also we had the biggest crude oil inventory build last week since September 2017. These are all points which would suggest oil price could be under pressure now over the course of this week. Where we are at with respect to this indicator, which is a 21-day moving average, what we mentioned previously is that since we broke below it at the end of October of 2018, oil was a short and remained below that 21 MA for quite some time, right in the way until January. So during that whole period, it broke down over 2,000 points to the downside. In fact, I think it was about 3,000 points in totality for that move. Yeah, it was the 3,000 point move in total, very significant, until we then broke back above the 21-day moving average. Now in 2019, oil has been up 40% since the beginning of the year. We've seen an incredible reversal in price action for oil, and all the time we've continued to see for Brent crude oil, every time it's revisited the 21-day moving average, it's been a buy opportunity. Just buy, keeps on closing back above that. We bought into all these dips, multiple bull flag formations as well, until it topped out last week. And then we saw the price action just consolidating at that zone. Then it broke through. And of course, we're now below the 21 MA. So what we want to see is what we saw previously here, whether oil now is just going to come back up to 21-day moving average, give it a goodbye kiss. Okay, so basically come up to that previous level of resistance, pop back up to 21-day moving average, and then say goodbye, and then we get another sell-off. And then with that, it could be a good opportunity to sell in, particularly if Donald Trump is going to start really ratcheting up these trade war tensions again. It's starting to occur. And what we're seeing is a retracement filling the gap that has occurred from the open. But I would be mindful of this, that we might just rally up, come back up to 21-day moving average, hit that level. It's filling the gap. So it was basically a long earlier in the session, hit that level of resistance. And then if it holds at the 21-day moving average, as it did previously when it broke back down into a downward trend and as it held as support, if that now provides resistance, then you can look to go for a sell short. And that's what I would look at. Now, on the flip side of that, you do have a bull flag as well. And what is just worth being aware of, if we were to see not confirmation of that, so basically if oil was to not find resistance at the 21-day moving average and then break above it, then that would suggest that actually it's going to be a long. And if it breaks and closes back above the 21 MA, it's just a very temporary close below it. And then it gets going to the upside again. And we see a continuation pattern in line with normal seasonality over the month of May. So that's really what I'm looking out for. On a retest the 21 MA, evidence to see whether it finds resistance. If it starts to roll over, we could sell it. But if it doesn't, if it hits that level, springboards high and breaks out, then it will be probably a long opportunity. Okay, so that's really what I'm looking at. Bear in mind the weekly looks a bit vulnerable at the moment, but again, it could be argued that it's a bull flag if it can break out. Say, for example, we close the weekly highs, then next week break out. It could be a bull flag continuation pattern, as we saw previously here with that continuation pattern to the upside. We've had a few of those. So although we have had a pullback on the weeklies, it's just worth being mindful of. So I'm tracking a lot of different data points on oil at the moment. I don't have a position on oil right now. I'm looking at these ranges. Range basically this week, I'm looking at the range being more or less where we gapped on the open, and then back up to resistance around that 21 MA. So look for the price action to move within that range right now. But I might short it if it finds resistance around the 21 MA for oil. So that's just worth being aware of at the moment. Then silver, I've had a few questions about this. Silver price action right now actually quite similar with respect to resistance around the 21 MA. And again, silver will of course be tightly correlated to gold. So with that respect, what I would look at, if gold just pulls back to 1270, 1275, then finds support and breaks out, we could see that same price action on silver. Now, hedge funds and money managers, they switched last week from being net sell short to going long. So they've started to buy that dip. Of course, we broke back below $14.50 per ounce last week, and then we saw this capitulation to the upside on Friday, over a 2% move. And you can see silver getting a bit of support at the moment, around 14.85 right now. Pull back a little bit earlier in the session. For me, what silver needs to do to confirm a long would be to break and close back above this downward trending channel, then pull back again. So basically break, close, come back above the 21-day moving average, then retrace, prove to me that it's holding that level, and then break out again. And then therefore, we would have a good high degree of confirmation that we would then be within this overall upward trend for silver, and it could be doing something meaningful, like a bottom could be in for silver price. Otherwise, it might just consolidate where it is at the moment, hold below the 21-day moving average, either move sideways or just roll over back towards the swing lows around 1450. That's what could happen otherwise. So I'm keeping an eye on silver. I don't have a confirmed setup on that just yet, but I'm watching it quite closely to see how that does pan out over the session today. S&P 500 has been interesting because what we did see on the open, that gap. So the gap, basically it gapped from the high there of where it closed around 2,949, the high on Friday, gapped all the way lower. So it was quite a significant gap. I mean, within the whole weekly range that basically the S&P 500 normally moves, it gapped lower. I mean, if you look at the Dow Jones as well, the gap was quite significant. So you've got over almost a 600-point gap down on the open from the Dow, from where it closed on Friday to where it opened. So quite significant price move to the downside. You don't really want to be on the wrong side of these moves, which is why you need to be a bit careful of getting into new trades as you get into a weekend for some of this gapping that can occur. But of course, you can trade the gap, which can work out quite well. Funnily enough, on the S&P, I am actually looking for a push higher back towards the highs from last week. So I am still looking for more upside on this over the course of this week, and the low of the week to be in, basically from where we gapped down just yesterday. So we are getting a retracement right now, and this pullback seems to have been bought back into again on the S&P 500. So we'll keep an eye out for that to see how it develops over the course of this week. The US dollar, for me, as I've mentioned, it tends to do very well from about Wednesday later on in this, excuse me, Wednesday later on in the session, and then particularly on Thursdays. Thursdays tends to be the strongest day of the week for the US dollar. So what we could see is a little bit more pressure to the downside. Not much going on today, to be fair. It's just an inside candle on the daily chart. But if we break down a little bit lower, I'd look at potential to buy in around the 21 MA or at the swing lows here. So I am actually looking to buy into the dollar on a retrace lower. Typically, the month of May is actually the strongest month of the whole year for the dollar, historically. So from that point of view, it's a seasonal trend, and also the commitment of traders data has shown us that hedge funds and money managers, they've bought again over the last week. They've continued to increase their net long positions to the highest levels since 2015. So although it looks like a sell-off here from the non-farm payrolls, which it is, but the previous week it broke out to two-year highs. So you can see the dollar very quickly turn around within a very short period of time. So essentially, I'm ideally looking to buy into the dollar around Wednesday or Thursday this week. That's my plan at the moment. I'm not going to do anything with the dollar just yet. Might enter it tomorrow if I get confirmation, if we break above the inside candle high, but otherwise I'll try and wait for Wednesday or Thursday before getting back into the dollar. US dollar Swiss franc. What I would suggest, it's interesting on the US dollar Swiss franc because I'm tracking what retail traders are doing, and at the moment it's within the region of 80% of retail traders are selling short the US dollar Swiss franc at the moment, and only 20% are long. So basically, retail traders, for the most part, as you quite rightly know, tend to be wrong. Not you guys, but most retail traders out there are on the wrong side of the move. And that tells me that if the US dollar Swiss franc starts to push higher, breaks above the swing highs, it could be quite a big move to the upside, quite extreme move, because a lot of retail traders are selling this market. It looks like a sell, right? From a technical point of view, it looks like a sell, but it is within quite a strong upward trend. And I would argue that there is a bull flag, but maybe it will roll over a little bit first before it goes higher later on in the week. But I am overall thinking this is a bull flag to the upside, and it's going to catch a lot of retail traders on the wrong side, and it will basically stop them all out and have a bull flag formation to the upside, and then it will break out and have a continuation. It's above the 21 MA, it's above some other key levels as well. So I'm basically looking for US dollar Swiss franc to go higher between now and the end of the week, in line with potential US dollar strength, which will come back into the markets on Wednesday or Thursday. So that's what I'm looking out for in the US dollar Swiss franc. Now, another market which has got a very strong bias of retail traders that are long, is the Australian dollar, US dollar. I saw this last week as well. And again, it's about 80-20. So 80% of retail traders are long Australian dollar, and only 20% are selling short. And you can see that they started to buy into this dip the previous week. So it looked like at the time retail traders were right. They were doing well for a few days. And then Australian dollar got slammed again with the dollar strength coming in last week on Thursday, later on in the week as well. We continue to see that rollover, retested the swing lows. So basically would have taken out traders who had their stop loss just below that. And even on the open, you can see where it keeps gapping down, and we gap down, would have taken out more stop losses. And now traders are again, they keep buying it. They're buying the dip again, even though it's breaking down and creating lower swing lows. So it's definitely within a downward trend. I mean, it's to pick the bottom on something like that, Australian dollar, when you've got these trade war tensions, which you know, or if you don't know already, basically anytime you've got an escalation in trade wars, if you go back to last year, July and August, it causes oil to sell off, and it causes the Australian dollar to sell off quite significantly as well, because Australia relies quite a lot on China for imports, exports. So with that, it does have an effect on the Australian dollar. So China's economy is interlinked with Australia being so close. And with that, if we do see another round of fears coming later in the week, Australian dollar could easily roll over again and break low swing lows. There's quite a lot of data coming out this week during the Asia Pacific session for the Australian dollar and the New Zealand dollar as well. So just go back to the calendars. I believe it's either overnight tonight or overnight from Tuesday night through to Wednesday. I know the Australian dollar and the New Zealand dollar, they're reporting during the Asia Pacific sessions this week. So just double check that on the calendar as well. But we do have quite a lot of volatility there for the Australian dollar potentially over the course of this week. Overall, though, my bias is to not be long the Australian dollar at the moment. You might be able to get some pips out of these quick moves to the upside, but I think it's a risky market to be long at the moment. Overall, I'm just very aware of retail traders' positions right now, which is their bias is massively long, whereas hedge funds and money managers are not long this market. The smart money is selling into it and increasing their sell short positions. Okay, so that's what we're seeing on the Australian dollar. Then let's take you over to the euro US dollar as well. We shorted this last week. We were short Wednesday after the FOMC statement. We actually caught a nice downward move from Thursday, bank profits before the non-farm payrolls on Friday. Then we've seen this reversal. It's coiling in price right now. It seems to be wanting to make a decision. I probably won't trade the euro again until Wednesday at the moment. I'll wait for direction to get picked. Overall, I prefer to sell it, but I'll wait to see if it breaks out a little bit higher. It gives me a better entry to sell short later in the week, about midweek is my plan on the euro at the moment. So I'm waiting right now. Of course, if it rolls over, breaks back below Thursdays and Fridays lows, I'll probably just short it anyway. I've actually got a short on this at the moment with the stop loss move to entry price, so it's a risk-free trade. So I'll keep that short on, but I might add to it if we break back below Thursday and Friday's lows, or we just rally up to the 21 MA and then sell off. With the pound US dollar at the moment, well, we had quite a significant move to the upside on certainly Friday, started to break down a bit here. Didn't quite get to that 1.32 handle. I don't have a position on this at the moment. It makes sense that it is starting to retrace after the breakout that we saw on non-farm payrolls. Often the Monday after non-farm payroll can give back quite a lot of the gains from the move on Friday. Now, I would watch out for that potential to roll over, maybe retest the 21 MA. So there might be a short-term sell short opportunity on that, but I don't have a position on the pound at the moment. I'm more inclined to trade the euro at the moment rather than the pound if I'm looking to sell against the dollar strength. It'll be more inclined to go with the euro, but the pound, that would work as well. Pound's actually set up for a bit of a sell short so far today. Okay, so that's what we're looking at there. The other market which we were selling was the US dollar, Japanese yen as well. You can see that gap down on the open. Actually, that's worked out quite well within our overall analysis there. Continuing to break down in price. Nice gap on the open. We don't have a position on that anymore. Banks profits on the US dollar, Japanese yen. You can see here where it's broken down back below the midpoint of the Keltners, the 21-day moving average, and it's gap lower. We're getting a bit of a retracement at the moment in line with the gap fill right now. I'd wait on that to see how it does resolve itself, but overall the trade war tensions have caused that move to the downside on a lot of Japanese yen currency crosses. So I'll wait to see what it does after it does fill that gap. But at the moment, we've just banked our profits on that. So I'm not looking to get right back into it just yet, but I'll continue to monitor the US dollar, Japanese yen. Looking at the New Zealand dollar, US dollar, it still looks a bit vulnerable, doesn't it? And again, a lot of retail traders are long this market right now. Normally, the price action of a market like this would be that it needs to roll over, break the swing low in order to then find support. It just needs to flush out. So where, of course, you know this, but traders will just have their stop losses below the swing lows. So be below this swing low and this swing low, which is the same swing low from December and the swing low from April. So it's very unlikely if we roll over that we'll just springboard off that level spot on a third test. Normally the price needs to roll over, tap out all the stop losses and then springboard. So that's what I would anticipate. Might be a very short-term sell short opportunity on the New Zealand dollar, US dollar. We've also got more data coming out during the Asia Pacific session this week for the New Zealand dollar. So just keep an eye on that if you are actively trading this market over the course of this week. So that's what I'm looking at in terms of the majors. Okay. And then we'll just move it over. Yeah, just take it back to gold again. Yeah, gold still holding around the resistance from Friday. I won't be waiting too long on gold. Ideally, I want to get my position on tomorrow. So by tomorrow, I want to have a position on gold. That's the plan at the moment. So I'm continuing to track that quite closely. See if there's anything else which is worth just putting on your radar at the moment as well. In fact, what I will do is just bring out another market for you as well. Yeah, what we'll do, we'll have a look at Bitcoin actually. So for those of you that like to follow cryptos and you follow our how to trade cryptocurrency webinars at binary.com, we've actually now hit the levels that we discussed previously. So if you go over to our last training on how to trade cryptocurrencies, which was about 3 weeks ago or so, we said that we saw Bitcoin, the rally coming up towards that $6,000 level. And that was our prediction as we get into the month of May. We actually hit that on some exchanges. We hit that over the course of the weekend. So on the MT platforms, MT4 or MT5, depending on, well, on MT4 and MT5, it hasn't hit that level on all of those, but some of the trading exchanges out there, cryptocurrency, Bitcoin did hit the $6,000 level over the weekend. I am expecting the potential for a retest back towards that level again. So basically breaking back out towards the swing highs, retesting those levels of resistance. As I mentioned previously, for those of you who track cryptocurrencies, basically you have a major event which is happening 1 year from now, which is the Bitcoin halving, which is where the amount of supply of cryptocurrencies will be reduced by, the amount of supply of Bitcoin, or the ability to mine it, will be reduced by half. So if you can imagine all of the gold that can be mined in the world, if suddenly in May of 2020 it was reduced by half the amount of gold could be mined, of course that will cause the price to go up, inflation in price. This happens every 4 years with Bitcoin, and it will be happening again in 1 year's time. Typically the price appreciation of Bitcoin really starts to pick up momentum 1 year before the Bitcoin halving. We started to see that momentum from the December lows, from the 16th of December, where Bitcoin hit $3,200. Since then, it's almost doubled in price, but really started to pick up momentum from the beginning of April, where it broke out $1,000 in 1 day. And now, since then, we're building up a very strong case here overall, and a strong support level for Bitcoin from that 5,000 level, springboarded off that zone. And overall, I'm looking for higher prices on Bitcoin over the course of this week. So I am expecting higher prices and basically pullbacks to be treated as buying opportunities, especially back towards the lows of today. In fact, back towards around the 5,550 level would be optimal entries that I would be looking at. Also, on Ripple tends to spend very little time at these levels between 28 to 29 cents. It's been a great opportunity to buy in each time we dip back to that level. Very key level of support. Ripple generally doesn't spend much time below those levels. So even at the moment, around the 29 to 30 cents, well, below 30 cents, around 29 to 28 cents, offers a great, in my opinion, offers an opportunity to buy in at an accumulation zone at a level of support. It's right back at the swing lows it was testing from December. It's the equivalent of Bitcoin being back at $3,200 to $3,500, where Ripple is right now, back at 29 cents, and the lows there from December were 28 cents. So for me, this is accumulation zone for Ripple, and I'll just put that on your radar as well. So with that said, that's pretty much the plan, guys, as we continue to progress throughout this week. Of course, we'll be back here with you on webinars this week as well. We've got the commodity currencies webinar on Wednesday, how to trade commodity currencies. And of course, we've got Friday's Commodities Corner as well. So I hope that helps you a bit, gives you a bit of a trading plan over the course of this week too. As I mentioned at the start of the session, if you haven't done so already, we'll be putting out a fresh report tomorrow, in fact, with our analysis. So if you haven't done so already, make sure that you're subscribed to Gold and Silver Club on YouTube. Just go to YouTube, search for the Gold and Silver Club, and subscribe to our channel. And if you would actually like to get access to all of our exclusive live trading room webinars throughout the week, you want real-time trade alerts and trading research and market insights real-time as well, access to our private members academy membership site, and also support and one-to-one mentoring as well, you can do so just by going to the link www.jointhelivetradingroom.com. So that is the link to join us at the Gold and Silver Club. Okay, great stuff. So with that, I wish you all good trading. Have a fantastic day. Thanks again to Charisse and the team at Binary.com for hosting today's session, and we'll see you all on the next one. Okay, guys, so take care and bye for now.